as we are approaching the final day of the rate cuts, price action can get really confusing, and I'm observing lots of patterns that can help us distinguish between a potential sell news event versus a massive pump that could trigger thanks to a short squeeze currently ready to trigger as long as traders perceive the outcome of the FOMC as a positive one. In today's video, I'll give you a very important update on the daily time frame, the very interesting developments that we're seeing in the open interest across all exchanges, what the whales are doing, and even a potential capitulation coming once again from the hash ribbons indicator. We'll cover all the potential weekly breakouts that we are currently seeing in progress, starting with the RSI1 and the spread charts. We'll look into the order book, these sneaky orders that are coming in here, and on fire charts as well. I guarantee you that there's no way that you can come out of a single YouTube video in preparation for the FOMC meeting with more information on your table. We'll try to make it easier for you to distinguish what is actually bullish and what is bearish from all these indicators. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes guys, yesterday, thanks to you, we made it once again to 150 likes. That is fantastic. I keep recording one video per day. In the past 2 weeks that I've been on holidays, I'll be back next Monday, and it will be really fantastic to maintain the 150 likes per video until then. Let's get into the content. Looking at the 4 hour after we had the breakdown on Sunday, in yesterday's videos we were talking about the potential to go and hit the resistance at RSI 58. In the same 4 hour candle, we managed to break out above that resistance. And we came back right after that candle to retest as support above the trend line. In the past hours, we've been just bouncing on the trend line with low volume, waiting for the outcome of today's FOMC meeting and expected rate cuts. Since yesterday, the expectation has dropped 2% from 65 to 63 for the 50 basis points, and we've seen an increase on the 25 basis points, contrarian to what Polymarket is currently showing of 50 basis points being on the lead, followed very close by 25. And we're gonna notice in today's video in multiple time frames, different indicators, all of them being right there in the middle. What I mean is that most indicators are prepared both for a bullish and a bearish outcome, more than ever, because no one can guarantee at this point in time whether the market is going to crash and become a sell the news event, or if really whatever the outcome is, if investors are going to be really happy. And that's not just only that is happening on the 4 hour in here, when from one side we see a breakout, but then immediately a cool off and a retest of the support with no further continuation yet, which means that this is slightly tilted towards being bullish from the point of view of the breakout. But as you can see, now we are at an RSI of 55, which is less than the 71 that we reached on the 14th of September. And that constitutes a bearish divergence, which is not necessarily telling us for granted that we are going lower. It's just telling us that we have slowed down and we are reflecting the uncertainty that we have currently in the market. Notice as well, at the top of the chart, we see the funding rates. And the funding rates tend to go negative whenever there is an imbalance and we see too many shorts, and it goes back to green when we start seeing once again that the market is dominated by longs. And since this movement from here, we can see we have now go back into the green. If we look at the monthly chart, again, we are bouncing from support, but at the same time, we have not been able in this particular month of September to make it higher than the highest candle of the previous bull market, which is meant to be strong resistance. It used to be support in March, April, May, June, and July, and we lost it in August, and right now we are testing it as resistance. And I'm sure if the outcome of the rate cuts are actually interpreted as positive by investors, we could easily re-enter this green box in here, because the price is telling us that it's waiting for a positive outcome. And make no mistake, if the S&P was to crash today, we're gonna see this as a retest and a kiss goodbye to the 60s, at least for a little while, until we can later come back to the 60s once again. Looking at the daily time frame, the picture is very similar. Yesterday I introduced this triangle. Make sure that you watch that video. We're gonna use it as a cheating code to give us a strong hint that we're going either for the top or the bottom of the range of the megaphone pattern that we've been monitoring for over 6 months now. And if we focus just purely on the triangle, we can see that it's already giving us some interesting clues. For example, let's zoom in. We exit from the top of the triangle, and depending how perfect you put this line, we are kind of in the middle of saying that we're coming back for a retest right after breaking out. But you could also argue that now the closing price is slightly below the resistance. And if we were to get rejected in here at 60.5 in the surroundings, which also coincides with our area of interest that we plot many months ago, and if we break the 57 as well, which is second interesting area of support that gave us a pivot around here, and in July as well, we could be heading for this plan of losing the bottom of the triangle. But if the outcome is perceived as positive, today we could be looking for an actual confirmed breakout from this area at the top of the triangle. Looking at the RSI is telling us that there is still no breakout. It's a lot clearer when we look just at the RSI and the resistance at 55 in here compared to when we look at the price. This is not telling us that we are gonna fail to break out. This is just telling us that the price remains there in the expectation of the outcome. Do you see the pattern? So this is not my opinion. This is basically reflecting what traders are currently thinking. This is psychology. It's telling us we don't have yet the confidence to break out and hold above. We have not the strength for that. If we were to see that conviction, we remain there just in case we saw a bullish outcome. The open interest is holding in the second third of the range of the past 6 months, which looks like something positive and bullish because we were talking a few days ago about a retest above 17 billion. And if we were to retest and succeed on that retest, we could be going for the top of the range. So from a point of view of open interest, things are looking like we could make it once again to 21 billion like we did in here and in here and in here. And why do we care about the open interest? Because when we do that, we tend to go to the top of the range. This is kind of the second half of the journey if you focus on the price now. And you can tell that it could do something like that once again. If we look at the megaphone pattern on the weekly time frame, you can see once again that the expectations of traders on a potential bullish outcome is there, but the conviction as of now is not ready. People are waiting for the actual outcome. You can see that we have a green candle on the weekly, but we are only entering to the half of the range between the two MAs, but still remaining in the safety of being below. If there was that conviction, we will be already above it. And to be honest, if you ask me if this is a bad thing, I don't think so. I think it will be a terrible thing if we were already at the 67K, completely above the bull's market support band, and then they give the rates and suddenly there is disappointment, and then it's much more easy for the price to become a sell the news event. And just a friendly reminder that we still have the CME gap from the weekend before. We already filled the one from this weekend that happened yesterday with this move in here. Precisely the opposite picture we can see on the volatility index of the S&P, which is it broke out for a larger volatility, but it remains calm right above the breakout zone. So if there was a market crash, this could easily move like this at the top of the range, but if not, it could remain in the lower end, but still right above the trend line. Dollar index remains very close to 100, so we still don't have a breakdown. Also worth mentioning that hash ribbons is ready for both sides. The MAs are getting extremely close. There's a tiny gap of 0.5% separation. Worth noticing that right before we had the previous capitulation, we had double the separation. And on the next candle, we saw a capitulation on the hash ribbons. I'm not saying it needs to happen, but you can tell that the history is repeating when you look at every single indicator that's saying we're getting very close to potentially seeing a hard rejection, and we can also dodge the bullet, reopen the mouth, just like we did, for example, in this area in January, where we were very close to a capitulation with the price action going lower to 39K, but then eventually we didn't just dodge the bullet, but actually we continue pumping 84%. And I get that many people watch the video and are expecting a black and white answer, buy or sell, but I'm afraid that this is not the channel for that. The mentality of there is 100% chances of this or there's a 0% chances of that only can belong to a beginner, someone very inexperienced. You can profit from that perspective, but the time span of staying profitable with such a mentality is very short. Eventually, the lack of understanding of how markets works is going to teach you a hard lesson. So I recommend to all viewers to never think about trading as black and white and to adapt your method to assuming that anything can happen. People get annoyed when they don't come out of my video with a yes or no answer. But all you're gonna get in these videos is probabilities. There's high chance of this, there's a low chance of that, there's confluence of multiple things increasing the chances of X, Y, and Z. And based on that, we prepare a plan and we execute it accordingly. I also want to make you aware that when things start becoming bullish, many influencers take advantage because they know that when things go bullish, retail comes back to have a sneak peek of what's going on. Many feel the fear of missing out. They start seeing posts like this. For example, this says weekly RSI breakout alert. The last time this happened, we went 170% up. 100K is closer than you think. Right after that, there is a link for people to sign up on Kraken so Kevin can make money from this post. The post has been seen by 50,000 people and unfortunately there is no breakout. If you look at this line, you may think as a beginner that this is a weekly breakout. If we look closely in my chart to that, you can tell that on Sunday we close at an RSI of 49, which is right below the resistance. This candle that you see between the 9th of September until today is a candle information. By next Sunday, this can perfectly end up closing down to the downside and even put a low, which will look precisely like any of these rejections in here. Or this could well end up at the 60s and end up being a confirmed breakout. Point being, a breakout confirmed is only next Sunday. The one from the previous Sunday was an actual rejection from resistance. So be very careful with how they are affecting your emotions and getting fear of missing out without confirmed signals. And let's have a look at the short-term realized price. This is a price that represents the actual average entry price of short-term holders. And it's very important because in bull markets, it tends to act as a level of support, with the exception of this current bull market. It acted as support in here and in there, but with this particular bull market, we spend plenty of time below it. And it's not different in the range from June until now, where we have spent most of the time below it, as if we were in a bear market. And I'm bringing your attention to this because we have already hit it as resistance on the 24th of August. We didn't even get close here on the 13th of September. And what we need to do in October is to get above 61.6, which is currently where the short-term holder realized price is. And that will fulfill that expectation that during bull markets, we remain above this average for the vast majority of the bull market. The fear and greed index is increasing to 45, which is still fear. We need to get above 50 to exit fear, and it's obvious there's a lot of expectations from the rate cuts. It seems to be like the one thing that is gonna save the market, and I have to give you my feeling. I do not like when a single piece of news drives the whole market back into the grid. Yes, it's good that we're exiting a monetary policy so tightening and that we're taking the first steps. But personally, I don't want to overestimate the effect of just simply the first cut. I hope I'm wrong. Luckily, I don't pay too much attention to the news, and if the chart were to confirm a breakout on the weekly, like we can see here on the spread charts and the ratio, where we have two of them already in the breakout zone, the VIX is in breakout area, the Federal Reserve as well, you can see in here, and the Nasdaq is touching for the first time since July once again the resistance, meaning all we need is a little bit more of a pump of Bitcoin and we could end up this week having as well a breakout from the Nasdaq. You can see as well that the DXY against the BTC is also against the resistance. So we have 2 versus 2, and just getting to 65k probably is going to cause that the fourth of them are in the breakout area. And if by Sunday we are still there, we have a confirmed breakout. If we confirm those signals on Sunday, that will be extremely bullish. We can also see the global liquidity index in this chart constricting throughout the bear market and having some sort of breakout in here from the 1st of July, it's been increasing. We can see the same effect in here with China liquidity. I'm actually tracking the global liquidity index and I have placed a trend line on the top of the RSI, and you can see global liquidity is having a breakout on RSI weekly. That is very positive. Wealth, withdrawals, and long-term holders are both strongly accumulating, which is probably one of the top 3 most bullish signals that we currently have. And many people are talking about the ETFs inflows that we have this week. We have 39 followed by 263, then a very small 12, followed by yesterday 186. But I want to be very realistic and not overhype the inflows. Yes, I know that right after a terrible week, we're kind of having a better week, but I want to make you aware that it's not as good as many people are putting it out there in crypto Twitter. If you just focus on this chart and you understand price action, you can perfectly tell that you have a low here, a high, a low, a high, a low, and we can continue up until here printing higher highs and higher lows. In this most recent action in the chart, which is just this movement from the 9th of September, you can tell that the low is lower than in August, and you can also tell that the current high that we have is lower than the highest high that we have ever had. In principle, this is the first time that I see the totals having a break on structure on ETFs. I can even imagine putting a trend line in here and I will be saying that this is retesting the breakdown if I could. But make no mistakes, if today the outcome of the rate cuts is perceived as positive, this is something that can be fixed. There's no much difference in here to put a new high, which will completely make everybody forget about this small detail. But we cannot ignore it, we just have to highlight in here that the ETF inflows are having a small bump in the way, at least. Let's have a very quick look at the liquidity pools and you can see why the price came to this area. There was this liquidity in here. It wasn't even in the red yet, but it was sufficient to attract the price with a very big candle to 61. And what I read from this is that if we were able to get in here, it shouldn't be that difficult for the price to get to 62 and to 63. If we zoom out a little bit and we focus on what's right above the price, we can see that we have significant chunks until 62. We have the chunk of 63 as we reviewed yesterday, and after we get over 65, we have a larger chunk at 67. And we discussed yesterday how this could turn up to become a perfect short squeeze, because the higher we go, there is more incentive to continue going higher every time for a larger price. So if there is a narrative to go higher, the way is perfectly paved to slide like if there was butter on the floor and you were sending a hot knife into the price. If we look even further away, you can tell that the 67 becomes nothing compared to what we have above 70k, which is a lot larger than that. So yes, there is the whole way to get to 80k easily if the narrative is positive. And if we did the same exercise, but this time looking at the lower end liquidity, we can immediately tell that there's not as much as compared to the top end, and that's thanks to all the shorts that continue to insist that we have to go lower, and every time we make a new high, they open new positions, new stop losses placed in here and in there. For example, right after this big green candle, they open new shorts with their liquidation levels at 64.5. But make no mistake, if there was a disappointment after the rate cuts, price will have to make a long journey into 52.5 to start grabbing decent liquidity to take out the CME gap as well. And if we zoom out a lot, you can see that contrarian to the liquidity above the price that tends to have a lot more in the journey to the upside, in the lower end there is pretty much nothing until we get sub 50s. And that's why I don't rule out the option of paying a final visit to the bottom of the megaphone pattern. It's not very likely, but it's still possible. Let's have a look at FAR charts, the order book, how people are starting to enter in positions for what's coming next later today. We have a support of 26 million right here at 56k and 30 million at 50k. And on the top end, people started shorting 62k with roughly 30 million, but that has become a lot thinner. Right now, it's only 20 million. There's also some shorting with 25 million at 65k, and 70k is currently loaded with 44 million. In the order book on Trading Light, we can see some shorting happening here right above 61k. We see some new support with 800 at 52.9. And this to me is telling me that there is quite a substantial amount of people that are considering that we might go for the CME gap and use it as a bouncing point to long, which is also an area of interest from the point of view of liquidation pools. As I'm recording the video, I'm seeing that now we are below our area of support on the 4-hour, and I just want to give you a hint that if we were to put a new low below 57.8, expect some volatility. I would prefer a bounce somewhere in here on the 59.5 rather than coming back once again to 57.8, because that will build an M pattern in here or a double top, which is not necessarily great. It could take us easily back into the 54s. Yesterday, I shared on Twitter, Telegram, and on Instagram. I remind you that I'm posting all the setups every day on those 3 social networks. The links are in the description. You decide which one is better for you. The posts are going to be mirror. Whatever goes to Twitter will also go to Telegram and Instagram. This current setup hasn't broken out yet. The neck of the inverse left and shoulders, it's a little bit vague. I place it based on 60.5, but I have the feeling that it will be better placed at 61.1. So I'm gonna reaccommodate this using this high in there and reaccommodate the target in here as well. It's quite a large target of 8k. Let's see if it plays out. I also share this setup on Ethereum, which I'm probably gonna cover in a separate video. Guys, I'm currently hosting a position airdrop on Bybit. You trade with $100 and they give you $500 for free to trade on any of these coins in this page. All you have to do is activate the top link in the description to benefit from the promotion and to see the instructions. I also left you a referral link to open a new Bybit account and unlock up to 30,000 in rewards. The referral link is also in the description. If you decide to trade with Bybit, we have a partnership as well, which means that you do not have to pay any of the memberships on our website if you have enough volume. The volume limits are pretty low. If you trade with $1,000, 10 trades will give you automatically what's required to get observer. With a little bit more of trading bots, you could get VIP or VIP with call. The VIP with call will give you 1 call with me once a month to discuss trading strategies and trading bots. I'll see you next time.